Hello, everybody, and welcome to our first chapter in intermediate accounting. On this chapter, we're going to be looking at the environment and conceptual framework of financial reporting. Okay. Um, Always in these PowerPoints, you're going to see that we start off with learning objectives. And in this case, we're going to look at the financial reporting environment, the standard setting bodies, the meeting of generally accepted accounting principles, and we'll look at some other things as well. In these PowerPoint overviews that I do for the chapters, it's not supposed to replace doing the actual reading of the chapter. I think you'll have important details that you want to uh, understand and study as we go through. But this will get you started. Okay, preview. Here we'll look at accounting and its decision usefulness, why we develop standards, and then who sets those standards, the SEC, the FASB, and other organizations, and how they're codified or documented. All right, so conceptual framework. Here we're going to have an objective of understanding the qualitative characteristics of accounting information and the elements associated with that. And then we have assumptions and principles, assumptions and a summary of that. Some of this I think you're going to recognize is review of what you had in Saddleback's 1A course, or if you took the same course from Santa Ana College, the 101 course. All right. Major challenges in financial reporting. We certainly have politics to consider. I think you'll get a little bit better appreciation of that as we proceed. There is an expectation gap between what the public expects us to do as accountants and what we actually do as accountants. And they see situations, which I think you're familiar with, Enron, that maybe color the environment in a not so favorable way. So we'll get into that a little bit. Those ethical issues are important as well as the financial reporting issues. All right. Let's take a look at describing this environment and who those major standard setting bodies are for our generally accepted accounting principles. At the end of this presentation, I will get into international financial accounting standards, and I also have some homework assigned in that so that you get a little bit of a flavor for that. But the majority of what we'll be doing is mostly directed at the generally accepted accounting principles. Okay, who why is this useful? Why is accounting information useful? It's useful for making decisions. And who uses that? Clearly, the owners and the managers of major companies. Owners of a major company would be the stockholders, but sometimes you're going to be dealing with smaller companies where the owners are smaller groups than the stockholders. The creditors, particularly the bank, they're going to want this information to see how you're doing and make sure that their investment in you as a company is safe. And of course, the stockholders. They want to know what's going on because it affects their investment, their dividends, and their stock price. Okay, so how do we do this? Financial reporting. Here, the financial information helps users with capital allocation decisions about the company. If you're an investor, where do you put your money? And so you want to present your company in the best possible light. The users, these investors and creditors, use them to make those allocation decisions, where they're going to put their money. And then that capital allocation is how and at what cost money is allocated among those competing companies for those investments. Okay, so what is the purpose of information presented in the notes to the financial statements? Give you a second to read that. And of course, the correct answer is answer alpha, to provide disclosure, full disclosure required by generally accepted accounting principles. So now we're going to provide financial information about this reporting entity that is useful and useful to present and potential equity investors, lenders, and other creditors in making decisions about providing resources to that entity. All right, we have these general purpose financial statements here, and those provide financial reporting information to a wide variety of users. Your traditional 4 financial statements: balance sheet, income statement, statement of cash flows, and statement of stockholders' equity. And then we're also going to provide the most useful information possible, of course, at the least cost. Materiality does factor in to what we report. I don't think any of you would want to capitalize a pencil sharpener, even though it may last 50 years. It's not worth the trouble of capitalizing. We would just expense that as office supplies. So we do those decisions in the interest of materiality, in the interest of least cost. We don't want to have that pencil sharpener sitting on our asset register for 50 years. Not a smart thing to do, and depreciate it at a penny a month or something like that, right? All right. In any event, equity investors and creditors, they're the primary users of these financial purpose financial statements. And believe me when I tell you, the banks have CPAs on their staff, and every month or period, we send those financials to the bank for their perusal. And so, very important piece of that. The banks want to make sure that we remain a good credit risk. All right. So now there's some more objectives here as well. Our entity perspective, we want that company to be viewed as separate and distinct from their owners. That's not so difficult when it's a big corporation, but sometimes smaller corporations, it can get a little bit confusing. The owner's selfish financial needs and the company's reporting. The decision usefulness here, the investors are interested in assessing the company's ability to generate net cash inflows. Cash is king. And management's ability to protect and enhance the capital provider's investments through a strong internal control process. Okay, now, who are these parties? There are a lot of them here. First, we'll talk about the Securities and Exchange Commission. That was established a long time ago in 1934 by the federal government. It is involved counting and reporting for publicly traded U.S. companies. So we, as a large publicly traded company, meaning that we sell our stock to the public, we're going to send those SEC reports quite frequently to the SEC, and they publish them. They're public data, and you can look them up on the SEC.gov website under EDGAR. All right. They encouraged the private standards setting body, which we'll talk about here in a second, who reports to the SEC. The SEC requires that companies adhere to generally accepted accounting principles and are responsible for oversight. They do have an enforcement authority as well if companies don't behave. All right, so this is a new one to you, I think, the Financial Accounting Foundation, the FAF. This group selects the members of the FASB, Financial Accounting Standards Board, and their advisory councils, and it funds their activities and exercises general oversight. The FASB is a private board. It's not a government board, although it does report to the SEC. Its purpose is to establish and improve standards of financial accounting and reporting that guides and, for that matter, educates the public, including the issuers, auditors, and other users of financial information. And there's a number of FASBs that have been generated. And I looked at like 180, 190 of them. Okay, now the Financial Accounting Standards Board has an advisory council called the Financial Accounting Standards Advisory Council. And here they consult on major policy issues, technical issues, project priorities, and selection and organization of task forces. Okay, now there's a process by which they go through in setting those standards. So here, the FAF selects the members, FASB sets the standards, and then the Financial Accounting Standards Advisory Council consults on those major policies, etc. So there's other organizations that are involved, and they include the AICPA. You've probably heard of the American Institute of Certified Public Accountants. It's a national professional organization, and most likely when you get your CPA licenses, you'll want to join that professional organization. And it established, there's also involved the International Accounting Standards Board. That's for all the other countries other than the United States. It's used in over 120 countries worldwide. So that's that. So now, here's the process. The topics are identified, placed on the Financial Accounting Standard Board's agenda. The research and analysis is then conducted, and there's some pros and cons. There's a public hearing on that proposal standard, and an exposure draft is then generated. And if everyone salutes, there is an accounting standards update, and it evaluates responses and changes in the exposure draft, if necessary, until a final draft is illustrated. I had a situation personally for my company where there was a prospective change dictated by the FASB on how you do slotting. And it's a long story as to how that went down, as you might guess. But the bottom line was that it had gone all the way through the exposure draft. We were talking to the Deloitte's partners as far as how we should proceed, which was a variant to that exposure, but had not been an official update. We eventually agreed to keep doing what we were doing, and in the end, that the board never provided an official FASB. Well, that looks like a good place for us to stop our first video, and when we return, we'll continue from here. Until that time, bye for now.